Certificate in Islamic, Green and Sustainable Finance. Module 6 Simplified Case Studies. Intended learning objectives. The learner should be able to appreciate the simplified case studies, and be inspired to create their own Islamic Sharia-compliant projects and ventures. Case Study 1, First Corporate Green Sukuk by Majid Al Futtaim Group. On the 15th of May 2019, Majid Al Futtaim Group of companies created history by listing on Nasdaq Stock Exchange Dubai, the world's debut green sukuk, issued by a corporate entity for $600 million to finance its positive environmental impact strategy and back the conversion to a low-carbon economy in Dubai, United Arab Emirates. Company background. Majid Al Futtaim, the issuer, the company, or MAF, is an owner, operator, and developer of retail and commercial properties in the Middle Eastern and North African, MENA, region. Established in 1992, MAF operates 40 shopping malls, hotels, and multiple use developments, with other projects underway, through its three active firms, namely, Majid Al Futtaim Properties, Majid Al Futtaim Retail, and Majid Al Futtaim Ventures. Majid Al Futtaim Group has developed the Majid Al Futtaim Green Finance Framework, the framework through which it intends to sell a series of green bonds and/or green sukuk and use the capital funds raised to finance and refinance, wholly or partly, currently existing and future projects that will provide environmentally positive impact and support the transition to a low-carbon economy. According to the framework, the qualifying criteria fall under four areas. 1. Green buildings. 2. Renewable energy. 3. Sustainable water management. 4. Energy efficiency. MAF Framework, Second Opinion by Sustainalytics, Sustainability Report. Opinion. Sustainalytics is of the opinion that the Majid Al Futtaim Green Finance Framework is credible and impactful, and aligns with the four core components of the Green Bond Principles 2018. Sustainalytics highlights the following elements of Majid Al Futtaim's framework. Use of proceeds, the four eligible project categories. O. Green buildings. O. Renewable energy. O. Sustainable water management. O. Energy efficiency. The use of the proceed from the green bonds, or green sukuk, are in alignment with those acknowledged as impactful by the Green Bond Principles 2018, and Sustainalytics is of the opinion that investments under Majid Al Futtaim's framework will deliver positive environmental outcomes. Majid Al Futtaim uses credible third-party certifications for its green building eligibility criteria, namely BREEAM, Very Good and Above, and LEED, Gold and Above. Sustainalytics considers the selected certification schemes to be robust and credible, and the selected minimum certification levels to deliver positive impacts. Sustainalytics further encourages MAF to certify to the level of BREEAM Excellent where possible. Eligible technologies for renewable energy are defined as wind and solar power. Sustainalytics considers these energy sources to have positive overall environmental impacts. Sustainalytics notes that these investments include both capital expenditures, as well as the procurement of renewable energy from other producers. To ensure additionality and strong impact, Sustainalytics encourages MAF to ensure that its renewable energy procurement is, where possible, subject to long-term power purchase agreements, PPAs, that support the construction of energy projects. Sustainalytics views positively that, within the categories of sustainable water management and energy efficiency, MAF has established quantitative thresholds for eligibility, limiting eligible projects to those that lead to 30% improvements in water use and 20% improvements in energy use will ensure that the projects financed by the framework provide high levels of impact. Project evaluation and selection. The project selection and evaluation process will be managed by Majid Al Futtaim's Green Finance Steering Committee, consisting of members of the company's Sustainability Committee, and a member of the Treasury team. The committee will be chaired by the Treasurer, and will, on an annual basis, select new eligible projects for inclusion in the portfolio, replace any projects in the portfolio that are no longer eligible, and implement any necessary framework updates. Proceeds management. Majid Al Futtaim shall deposit the net proceeds of each green bond, or green sukuk, in the company's general funding accounts, where they will be earmarked for allocation using a green finance register, containing information regarding each green bond and green sukuk. Proceeds not yet allocated will be invested in accordance with the company's liquidity policy. Sustainalytics notes that MAF will value assets in its portfolio at book value in line with accounting standards. This approach will ensure that assets are appropriately represented in the portfolio of projects despite the lack of a formal look-back period. Based on the use of a green finance register, and the disclosure of assets under construction, Sustainalytics considers MAF's management of proceeds to be in line with market practice. Reporting. Majid Al Futtaim commits to publishing an annual allocation report and impact report regarding its green-eligible project portfolio. The allocation report will contain a list of eligible projects, the total amount allocated to each eligible project, the amount by project category, and the balance of unallocated proceeds. This process is in line with current market practice, and Sustainalytics highlights, in particular, the highly granular level of reporting. Majid Al Futtaim's impact report will be provided at the level of each project category, and may include relevant metrics such as level of certification by the property, estimated GHG emissions avoided, amount of water recycled, and expected energy saved. This process is in line with market standards. Sustainalytics Report, 2019. Simplified Case Study 2 Malaysia Quasi-Sovereign Green Sukuk Half. Background. Malaysia has the third largest capital market in Asia and is a leading Islamic finance hub. Following the emergence of issuance of green bond to tackle climate change challenges, in early 2017, the World Bank, Bank Negara, the Central Bank of Malaysia, and Securities Commission Malaysia established a technical working group to explore options for developing a green Islamic finance mark in Malaysia and for encouraging investments in green and/or sustainable projects. This technical working group came up with the concept of the green sukuk and tried to sell the idea of a green sukuk based on green bond issuance with the Ministry of Energy, Green Technology, and Water, KTTHA, Green Tech Malaysia SDNBHD, Ministry of Finance, Malaysian financial institutions, and other potential issuers. Results 3. Tadau Energy, a Malaysian quasi-sovereign entity, in July 2017, issued the first green sukuk in the world, raising RM250 million, $59 million to finance a 50 megawatts power plant in Sabak, Malaysia. The sukuk was issued under Malaysia's SRI Sukuk framework and endorsed by the Sharia Advisory Council. It also benefited from an independent review by the Centre for International Climate and Environmental Research Oslo, Cicero. Following this example, Quantum Solar sold a RM1 billion, $226 million, green sukuk, for the biggest to-date solar power project in Southeast Asia, with the solar plant having an aggregate capacity of 150 megawatts, AC, or 197 megawatts during peak period. Both these solar power plants are connected to the electricity grid, with guaranteed purchase of the units of electricity produced, enabling payments of the cash flow to the Sukuk investors. Both these issues were primarily local market issues, listed on Kuala Lumpur Exchange. Simplified Case Study 3 Indonesia Sovereign Green Sukuk $1.25 billion. Indonesia is the most populous, Muslim-majority country. In line with Islamic values of Maslow of the people, it sought to reduce its GHG emissions. Following its neighbor, Malaysia also decided to issue its green bond for this purpose, based on the Sharia principles, hence the issuance by Indonesia of the first sovereign green sukuk in the world. The Sukuk issue was guided by the Green Bond and Green Sukuk framework and reviewed by an international independent reviewer Cicero. The proceeds of $1.25 billion Green Sukuk were to be invested in selected eligible green projects based on the Green Bond and Green Sukuk framework. The investors' geographic distribution was 32% Organization of Islamic Countries, OIC, market, 25% Asia, 15% EU, 18% the USA and 10% Indonesia. This proves the global appeal of the issuance of a green sukuk. Case Study for Hazina Development Trust Limited, an Islamic Sharia-inspired microfinance institution based in Mombasa, Kenya. Hazina Development Trust Limited, an Islamic Sharia-inspired microfinance institution, MFI, based in Kenya, has recently partnered with MPEG to provide finance for its solar system, which assists in electrification in rural areas of Kenya's coast-based region. The process works as follows: the Islamic MFI keeps demo units of the solar system's offices. If a customer wants to purchase, it purchases from MPEG and sells it on a cost-plus basis to the customer, on an installment basis over 24 months. It also has an arrangement with a community-based youth group who makes local energy-efficient stoves called Jikos using firewood or charcoal, which are slightly more expensive for the local population. Does a Murabaha-based contract on installment-based payment. In both these instances, the objectives of green and sustainable projects are achieved at a micro level, directly affecting people, in congruence with Maqasid al-Sharia, and Maslow objectives of the philosophical foundations of Islamic economics. It also has other financial inclusive products, also inspired by Islamic finance values.